just because something can be put onto a blockchain does not in of itself create value.
We're going to be hosting Edward today. Talk about the world of digital assets, banking as a service, and where we are in this innovation crypto cycle. Edward, thank you so much for joining us.
Yeah, thanks for having me.
Zerohash. Tell us about Zerohash. What is Zerohash?
Yeah, so Zerohash is effectively, we call it crypto as a service. So we enable any group to embed and launch crypto within their infrastructure natively. So we are an API that allows people to buy, sell, hold, send, receive, and stake digital assets. In terms of how that plays out, our thesis is that every financial services company in some form will be a crypto business. And so we want to empower those businesses to do so. So, for example, we service a bunch of, for example, neobanks, groups like Current, or, for example, brokerage firms such as IG, Tastyworks, as well as payment companies, most recently, for example, Stripe. So we power their infrastructure, enabling them to embed digital assets into their services as either an investment product, as a means of payment natively through our infrastructure. And we take on all of the regulatory burden and all of the technical burden as well.
So you're like the crypto version of banking as a service, or kind of interfacing with Web 2 and Web 3 to coin a term.
Exactly. It's a classic as a service business, right? So brokerage as a service, banking as a service, payment as a service. We just renamed it crypto as a service. So, it's a similar economic structure, similar sort of aspect. But, our view more generally versus just financial services companies becoming crypto companies, and you alluded to it with Web3, is that every consumer business will become a Web3 enabled business. And we want to provide infrastructure for that as well, which we already do so. So, for example, we have a number of non-financial services companies, such as DraftKings, which is a gaming company, which is powered as well through Zerohash. So it's as a service business. Hopefully, our thesis is that the TAM here is significantly larger, potentially every consumer business out there.
Where did you get inspiration to set up Zerohash? Tell us about that kind of eureka moment or the genesis of setting up the business. Were you in a bathtub and you thought, the world needs a crypto service company? You ran down the street naked?
Yeah, I mean, I don't think anyone, I mean, if people have those eureka moments, they're different to us. I mean, our story is, definitely not a straight line. There's definitely a number of false starts. I mean, Zerohash has been around since 2017. So, we are almost 6 years old, which in crypto world, you almost add on crypto years, right? So we've been here for a long time.
It's like dog years, right?
Yeah. Exactly, crypto years. It certainly ages founders as well in this space. The business was started initially thinking through, hey, we'll become a B2B business. We will offer an exchange. But very quickly we realized actually the back office infrastructure, the non-sexy part of the business, was really the opportunity. Our thesis was, look, if crypto is going to become omnipresent, if it's really going to become a big thing, surely there's obviously going to be crypto native companies such as Coinbase, and Coinbase, was already established, but there's going to be this adoption from traditional groups as well. And so as we were launching the exchange, we actually, did decent volume. We realized, wow, this is a pretty low margin business. It's going to get squeezed pretty significantly. But also what people keep wanting to talk to us about is dropping trades into us. So we, this was deep. This was, almost, I think, a year in. We told our investors, hey, you invest in an exchange. The exchange, we're closing the exchange. We're becoming a B2B2C business. And so, that's not an uncommon story in infrastructure businesses, is that they build something themselves that they think consumers want. They realize that the infrastructure is there. And so I sometimes say to people, the beauty of kind of infrastructure businesses that we have, which we learned through experience, is we have B2C margins but with B2B costs. And that's the beauty of a B2B2C business, if you can really structure it right. So definitely not a straight line. You know, and obviously in the past 2 years, the dominoes have started to fall with major companies now launching digital assets. If you look at, for example, the top 100 most downloaded applications in the world, a large portion of those now have crypto products, whether they built them themselves or through partners such as Zerohash. I think that's, you know, that's what we're seeing in the space. And so those dominoes have started to fall, and we're obviously that infrastructure to kind of bridge, as you described it.
And maybe one last question before I hand over to Gaurav. There was a line I think your colleagues have said, and I'm going to read it out. He said, every financial services company will become a crypto company. Mm-hmm. When did you first say that? What did you mean? I think it's obvious what you meant, but I'd love to hear if you can unpack that. And how has that changed over time? So if you were saying that in 2020 or 2019 to versus January 2023 when we're recording this, how has that kind of thought changed, that idea? Every company is a crypto company.
Yeah, I mean, I think what that means is, I mean, maybe just taking a step back, what do we see as you know, crypto, or even Web3, or, you know, any buzzword? I mean, our fundamental view, and this is what we try to educate regulators on and other things, is cryptography is not an asset class, it's a technology. And so in theory, it can be anything and everything. And so there's going to be a lot of financial companies that, or a lot of non-financial companies that also adopt digital assets. So with that kind of context, you know, we view crypto, right, just kind of shorthand, as both means of payment, right? If you look at traditional financial services companies, as well as a store of value. Now, those two things, there is a degree of overlap. There are certain aspects and certain assets that may serve as both, but there's certain assets that certainly don't. And so our view is that if you look at, for example, trading platforms, people will look to trade digital assets in the same way that they trade stocks or bonds or anything else, as a defined asset class. If you look at payments, people will start to use digital assets or cryptographic technology rather, to enable payments, whether it be micropayments, speedier payments, or what I think really changed the landscape and what attracted the attention of groups like Stripe and others that we service, kind of traditional acquirers, is that they said for the first time, wow, we need to be crypto enabled, because to service traditional merchants, whether it be Nike through Nike Swoosh or anything else, this is the first time that we need to bridge, because the end customer wants to buy fiat, the end receiver is a smart contract, right? And so you actually need to integrate with crypto in order to enable that mechanism. And so in that sense, crypto is a payment mechanism. And, you know, we're still relatively early on in the inning. So what we mean by every financial services company will be a crypto company is that if you're a trading platform, a store of value platform, an FX platform, a payments platform, crypto will begin to make headway into your space, and you will likely want to embed that. It's not to say that you eviscerate it, but it's now part of the service. And I sometimes say to payment folks, look, if you're ignoring crypto, it's like ignoring a major emerging economy. Don't think of it like it's not, you're not providing access to a geography, you're providing access to, and not sounding too, you know, grandiose, you're providing access to a new world. And you need to bridge that. It's not to say that that Web3 world takes over the Web2 world. It's in the same way that an emerging market doesn't completely destroy every other market, but you need to bridge that. And payment folks say, wow, we bridged towards India years ago. We bridged into other parts of the world. And here they're saying, okay, we should probably bridge into Web3. And that's what we're starting to see.
Got it. Gaurav, why don't you jump into the conversation?
Thanks a lot, Ronit. Edward, a pleasure to have you on the show. it's extremely exciting what you've built. I think you're being extremely humble and underselling really what you've built so far. For someone like Stripe to actually uh, publicly admit to working with somebody hand in hand at the scale that they're working with you is no small accomplishment. So just congratulations and really well done on everything you've done so far. I really am enamored by what you've done, because I've been sitting in the payment space for 20 years as an operator, builder, and person that's implemented technology in over 20 countries. It's not an easy task, and to do it even in crypto years, in 6 years, it's really, really fast. So, but what I want to focus on for just a second here is, you're talking about bridging these two worlds together, Web 2 and Web 3. And it's a task where it's built a lot on trust and expertise, right? I'd love to understand the kind of team that you've assembled. I mean, what you have to have a mix of old and new people in this space, because the products that you're building, although they sound almost like traditional products, KYC tools, APIs, they are from a format and maybe a standards and regulation piece. And it's a bit tricky here, isn't it? Building these products, but in a regulated space, working with entities that are traditional players, but also moving into the space. How do you navigate through building and delivering this from the team perspective or technology perspective? How do you navigate that road? It's quite perplexing.
Yeah, I mean, look, I think it's often more about characteristics that we try to hire for. So we try to hire for curiosity, and kind of this space. Also, this space moves a million miles an hour, right? So what is important today probably wasn't important 12 months ago, and so you can never remain. That curiosity has to remain constant. We do try to take certain rubrics of traditional standards and apply them to crypto. That's partly because we are a highly regulated company. So just for example, in the United States, we're regulated in a number of global jurisdictions: Australia, Canada. In the United States, we're regulated as a bit license holder as well. Look, our view on regulation is that this is, like I said, this is a technology, not an asset class. And so we play in, for example, non-security tokens. And so we believe that the rules that apply to non-security elements fall within a certain regulatory structure for certain things, and certain things don't. Right? So should a regulator regulate the purchase of a Bored Ape? Right? Potentially elements of the money movement, yes, but what about everything else? And so we do apply certain rubrics, but really what we hire for is curiosity, and we take a really global view in hiring. So we're about 165 people now. We're one of the few crypto companies, still scaling. So we'll be hiring about another 20 people over the coming 12 months. And we have major engineering hubs in Australia, Europe, Brazil, and the US. And so part of it is find the best people, no matter what geographical location they're based in, that have a really, really fundamental interest and curiosity, that have a solid foundation in that. But there's obviously a lot of unique aspects of digital assets, and it's just about hard work.
Thanks for that. I think, when you're talking about building, the next logical question is about product itself. In a market where you're servicing, as you talked about, a B2B to C proposition, you're building on both sides, the merchant side, the consumer side, the business side. There's a lot of elements that you're trying to join together. And each geography that you're addressing has more urgency or perhaps adoption or scale that you need to address as a business. So you said you're present in geographies like the United States and Australia. Can you tell us more about these geographies that seem to be conducive and logical for you to pursue building product in, that you have to be regulated in, have a team in, and work in? That's something that's also interesting, because you work with Stripe as a global organization. but
Mhm.
can you service Stripe globally, or can you only service Stripe in certain geographies?
Yeah, so look, when we talk about the world, we're talking about a lot of different places. And so that's one of the complexities about this. But really, the way that we try to narrow the focus is we basically say, look, who are the largest largest global customers, and Stripe is one of them for us. Who are the largest prospective customers that we believe will come in here? And where do they have concentration of customers? And really, really understand those geographies really, really well. So the way that we view geographical expansion is less to say, and I was talking to you before about our plans to expand into Dubai from a regulatory perspective, it's less to say, look, we view it more as a beachhead approach. So we say, look, we have a number of really, really large global customers. They care about Dubai. They basically explain to us, look, this is the potential market opportunity. And we say, wow, okay, if we never close another company in Dubai, it's a win for us. It makes logical business sense. From there, our hope is that we can then expand and use that to service more local partners that potentially aren't global in nature. But our hope, obviously, is that they also become global, and we can also service them, for example, in the US. So it's that bridging aspect that exists. You know, another good example is Brazil for us. You know, we now have a Brazilian entity. We have a Brazilian compliance team. We have a Brazilian development team. We have a Brazilian commercial team. And Brazil is a great example. We service a bunch of international groups that have have made some good progress into Brazil. But Brazil is also super, super exciting. If you just look at local partners there, if you look at, you know, what is the most downloaded financial application? The top 10, it blew me away yesterday, and I keep talking about this download, so this report is top of mind. You know, if I recall, it was 7 out of the 10 most downloaded applications were LATAM companies. And so that gives you some sense of why we are expanding to these regions. Is one, partners that have customers there, but also two, then that additional step of, wow, there's a really, really interesting market here of more local players.
Talking about the business itself and where you're present already, with these products and services that you're building for the B and you're building for the C, can you give us some insight, you know, of what you're seeing in the market in terms of the most recent times with crypto winter, as it's been dubbed? Have you seen it have a drastic effect on volumes, or are you seeing so many people come into the space from a participation point of view, from a C perspective and a B perspective, that it actually might have slowed things down, but things haven't gone backwards? Can you give us more insight on what numbers you're seeing, or what growth you're seeing, and where you're seeing it, and why, if you know?
Yeah, so I mean, individual customer volume is certainly down, in particular in the kind of brokerage type platforms, and that will be no surprise. If you look at just equities volume, it's down. If you look at crypto volume at crypto exchanges, that's down anywhere between 50 and 75% in terms of pure volume. Now, for Zerohash, we're very diversified. Like I mentioned to you, for example, we have payment companies, non-financial companies such as DraftKings. So we actually had year-on-year growth, almost 50% increase in revenue in a downturn market. And that's largely driven by, one, more companies entering the space. Two, just the diversification of our customers, right? So we're not seeing that kind of downturn in other spaces, which makes us more resilient. But also just, if you look at just fundamental SaaS, right? The way that we buffer ourselves slightly to these downturns is that we have monthly minimums, right? So we have a SaaS model, monthly minimum plus usage-based component. So those three elements have allowed us to not only weather the storm, but actually put us in a very, very, very strong position. And what's happened, a lot of the issues isn't, a lot of the failures in the space have happened very quickly, right? If you look at, for example, other infrastructure providers, FTX white label was one, Wire was another. In the last 3 months or 6 months, it's a bit of a blur, those companies have disappeared, right? And they disappeared not because of the downturn, not because of decreased volumes, but because of certain business practices, and they are obviously very, very fundamentally different. I'm not trying to combine the two, but fundamentally it was due to practices revolving around under-collateralized lending, collateralized with highly volatile assets. If you look at Gemini as well, Gemini is an infrastructure product, very, very basic, but they were starting to make some headwind with us. I mean, people just aren't going to trust it now. So we steered away from things that we just did not want to touch. And we just did not believe that offering customers the ability to rehypothecate funds and lend them out was a good business strategy. And so, you know, we're in a strong position, not only because of that growth, but also by also importantly saying no to certain things. And you mentioned kind of international regulatory pieces, although you can kind of do a regulatory arb sometimes, we've taken the view, look, regulation is the floor. It's not necessarily the standard. And sometimes people conflate those two. And so we just didn't think it was a good idea. Whether or not we could do those in certain parts of the world, we said no.
It certainly seems like you've confirmed my, assumption that growth is still on the up if you're balancing the C proposition along with the B proposition, because a lot of people are still understanding how to enter this market from a participation point of view. And it seems like what you're providing is the ultimate fast track way into it.
Yep.
Now, when you're building out more product and service, I guess you're going to be the bellwether indicator for how the markets are performing. So you'll have a bit of a sneak peek of what's happening if you're amongst the market leaders, which I suspect you are. From a competition point of view, I always ask this question from an interest point of view. There's always a saturation point at some point. There's always a leveling off and a plateau of how much you can build from a point of view of products and offerings and services. Do you think there'll be a lot of people, and it's good for the market now because it's young in crypto years, but down the line, do you see yourself becoming a more regulated entity, if I can tease a bit more, where you start actually holding funds and doing things? Is that something you can foresee happening? And I'm not talking about next year or the year after. I'm talking about, when maybe 6 years from now, again, when crypto is perhaps a bit more mature, things are stabilized a lot more on a global scale, right? Or not a particular service. Do you see yourself ever wandering into that space, or do you think you'll always be hands off?
Yes, we're very hands-on with crypto. So I mean, the Stripe flow, which is obviously one of the most interesting ones, it's a non-custodial flow. So effectively, that crypto is immediately sent out
through.
It flows through. But Zerohash is technically the counterparty to the transaction. For a sub-second, it holds onto those assets for the customer, and then it will send those assets out to the customer. Mm-hmm. But if you look at our brokerage flow, we're holding large amounts of crypto assets for partners. And really more importantly for end customers. And so we are custodying crypto assets. We are in that flow of funds, and we are highly regulated. Now, in terms of how this evolves, potentially, reframing it, are we interested in maybe getting into certain other regulated aspects, right? Like I said to you, look, in the United States, for example, we're a money transmitter in 46 states. The others, we're effectively excluded from needing licensing. We also hold a BIT license with the state of New York. But we're very clear, we do not touch security tokens. Now, security tokens potentially become interesting over time, but it's still very, very nascent. So will we look towards getting, and again, kind of taking our approach of crypto as a technology versus an asset class, do we want to get more regulatory licenses to be able to serve more of the evolving crypto market? It's certainly interesting, but we're always driven by the fundamentals of what does this space look like? And what will it look like? And honestly, with security tokens, more work is needed to basically show that there is a value add that is there, that there is a driver, there is impetus. Just because something can be put onto a blockchain does not in of itself create value. And so we're driven mostly by that approach, that by putting things onto a blockchain, does that create value? If it does, what is the regulatory approach? If it makes sense, then we are more than able and willing to expand our regulatory coverage.
Edward, I wanted to ask you another question. there are a lot of people who listen to this show from all over the world, and what we try and do is we try and get something a bit unique from the founders who come on here, and we'd love for you to share with us perhaps something that people didn't know unique about you. It could be a more humane story than about the business, and I'd love to learn more about a personal aspect of you or the business that you could share about your journey with some of our listeners.
Yeah, I mean, look, I mean, the whole Genesis story in some form is around kind of this unknown or kind of pivoting and tacking. I mean, we started the business off, you know, like I mentioned a bit earlier, around you know, being a crypto exchange, basically a B2B platform. And you know, you put your heart into that. That's what every single investor thought that they'd invested in. And then you say, look, actually, this kind of the stuff behind the scenes, the non-beautiful stuff, is actually like, it isn't there. And so it's a little bit, it takes some time for, I think, people at the company, investors, yourself, say, look, we're going to be this brand, right? Versus we sometimes say that now, as an infrastructure business, we want to be the biggest crypto company that you've never heard of, and getting really, really comfortable with that. And you know, what certainly helped is over the last, you know, 6 years since we started the business, is infrastructure's become sexy, right? You've got Plaid and all these companies that have really scaled. They were obviously around then, but now people said, wow, that's actually a really awesome business. But that takes some course correction, right? That's tough to push that through. You've got investors, and a few months later you say, actually, that's not the idea. That's not what we're doing.
Did anyone leave because of it?
Yeah.
Oh no, did they miss the boat?
Yeah, I mean, that's
did they try and
okay.
come back in afterwards going, no, actually we were wrong, we want to come back in?
No, I mean, that's okay. I mean, we're not here to tie people down. We're here people who want to row the same direction. And so you know, it certainly changed one or two relationships with one or two investors, right? Hindsight 2020. Was it a good idea? 100%. But at the time, it's really, really unknown. And but you know, our very fundamental point was, what is the most that we can build here? Our view was that we could build a $150-200 million business with the current approach that we were on. You know, now, you know, we think we could build a $10-20 billion business, right?
Wow.
And so that's the fundamental difference. And it's where do you want to play? What do you want to do? And I kind of keep coming back to this kind of point, right? Be comfortable with what you're doing, but it's okay not to be everything for everyone. And that's kind of how the Genesis story started.
Sounds like a fun journey to be on, ups and downs, lefts and rights. As a person that's operating a business and raising money, it's never easy juggling everything, especially passive expectations versus operational delivery is a tough juggling act. So kudos to you, my friend. Kudos to you.
Thank you.
Thank you for that. Looking forward to seeing you in Dubai and meeting in person. And
Absolutely.
with that, I'd love to hand back to Ronit, please. Ronit?
Yeah, just a few wrap-up questions. I was amazed by your comment that in this crypto winter that particularly the retail world is in, you're still growing and building. I'd love you to, if you can, the extent that you can share, just unpack a little bit more around that, you know, piece. You know, what's been sort of, what makes you different, and is it the kind of the call it institutional or the corporate client who is still building? I'd love to have any insights around that, and then maybe we can talk a little bit about talent as well and regulators in a second. But
yeah, I mean, partly we've taken a very diverse, like we've taken a view to be very crypto native and to be very, very flexible from a technology perspective. So that breadth of customer support, that breadth of our ability to support a range of customers is really what's put us into that position, right? We can effectively take any financial services company through our APIs, right? I mean, a payment is effectively a purchase of crypto. Guess what? Brokerage calls those trades. So it's really about, we have a really, really strong crypto core that is 80% the same for different verticals. And what is that 20%? And we've made some good calls on the verticals that would evolve. We like to scale with intention. And we like to have, for example, on the acquiring space, several flagship customers that tell us that this makes sense and that we have contracts and all these other pieces, and that's put us in a strong stead. So it's really diversification of our customer. Also, I think just quality of service, right? We offer a really strong business, really strong service, 24/7, 365, really robust technology stack. The ability to get up and running very quickly. I'll give you one example. A group called Juno, one of the largest kind of players in the United States, was with a competitor that's had some trouble, and they'll go live in under 3 weeks. That's contract, compliance, and technical integration, end-to-end testing for hundreds of thousands of end customers, and that's why people come to us, and I think, or more importantly, also stay with us.
And in terms of like being able to scale up so quickly or give your customer that kind of solution, but can you talk a little bit about the talent side? I know we've talked about it already, but what is there a secret sauce? And when you're building, when you've been building out Zerohash, tell us a little bit about like what makes your talent side, your people special or different.
Yeah, I mean, look, we're a demanding company. We always say this on every interview. We're a demanding company, but incredibly flexible. We don't care where you live. If you want to move, if you want to be a digital nomad, that's fine too. So we're very clear on our expectations. I think going back to the business point, it's the same with people. You can't be everything for everyone. You have to know what you are and just be true to that. And we want people to come here and say, look, we're still a small company, right? 160 people. I see no reason why our talent shouldn't get better, right? And sometimes people say, well, as we scale, I want our talent, like our average talent pool, to be better, right? I think as you scale, there's benefits potentially, right? You de-risk the business. You can attract certain people in different stages of life. And that's really important. So we're clear on what we are and what we're not. We're a company where people who want to have ownership, want to drive something forward, don't want to be micromanaged, want to own things. And own things means owning the success and the failure. It's important. I sometimes say in a startup, the most important thing is being comfortable being uncomfortable. And that's what we try to find. And when we don't, right, it's okay, right? We take the approach, you either change people or you change people, which means you try to change that person. But fundamentally, if it doesn't work, it's not good for either side. And so that's, I think, an important approach as well, right? Is to be clear on standards up front and clear on maintaining standards up front. And we have a really good retention because of it, right? Because of the flexibility that we offer, but also people want to own things. And also I would say that we're very transparent. Every single person in this company knows exactly how much money and how we made money last month. And we do that every single month. And I think that's important because, one, we're a remote company. So we've got to empower people to make decisions. But secondly, it creates an investment, an increased investment in the company, right? Because people invest in the most valuable thing in life, which is time. And so they feel that they've really got an insight into the businesses. So really we operate, it's not radical transparency, right? Like, it's not like it's not like, Bridgewater, in terms of how they think of transparency. We think of transparency more, look, if you want to know something about the business, we'll tell you. Right, like we're not going to sugarcoat things.
I don't know if you've been. I'm sure Netflix, the early days of Netflix until recently was like that, right? There was basically, literally, I think everyone had all the financials, maybe not live, but within a month, and then I think after it became a public company and it became harder. Until, I mean, I think they carried it on till a long time. This kind of feel. This is we're open and we're demanding. I loved your phrase, demanding but flexible, right? I think oftentimes big companies go the other way. They calcify and they become not demanding of the best, and they become inflexible. So it's like the worst of both worlds. Last kind of navel gazing or kind of horizon scanning question. crypto markets went, yeah, and you carried on doing this according to what you're telling us. So, yeah. At what stage, like this carrying on going, makes this your bottom, whatever it is, bottom left to top right trajectory, makes it harder because this is a swan dive, right?
Yeah, look.
I mean, the market total assets in crypto are less than $1 trillion. It's 1/3 or so of what it was at the peak.
Yep.
We at the trough? Come on, give us your crystal ball. Are we falling from here? Are we stabilizing? What are we doing?
we grew the business during the last crypto winter.
Right.
And so look, just to be clear, when the market is hotter, when everyone's doing well, is that better for us? 100%.
Yeah.
Right. It's not to say that these things are good, but this is a highly emotive space. And we grew this bit, and I've spent all my professional career in kind of what people would call, spaces whereby people are very emotionally drawn to. And I see my job as narrowing those emotional bounds, right? So last year, when everything was doing, as you said, going up, we did not overextend ourselves, right? And now in fear, we're not going to, like, clearly you kind of, I sometimes use the same analogy, right? You're tempering the sails, but you're not radically, pivoting and tacking. That's the way that we try to build the business. So look, fundamentally, the way that we view our business always, and we've always taken this view since the last, and it's not to say that we started like this, but going through the last crypto winter, where and I say this to investors, this isn't some sort of surprise. I say, I want to build a business where I don't rely on you. I don't want to ever come back to you. Now, I want you to invest, not because I need you, but because you want to, and because there's something even better that we can do together. But we built a business. I mean, last year people were saying, "Wow, you're quite small. You're not spending a lot of money on marketing." Sure, I mean, that's okay. We want to build a profitable business that is self-sustaining. And the way that we always view, the way that we model internally is, what does zero revenue look like? What does flat revenue look like? And what does projected revenue look like? And guess what's the first number that we look at? Zero revenue. That's the way that you have to look at building the business. And that's how we've always looked at it. And you've got to then temper those emotional bounds and not put your foot on the accelerator, not put your foot on the brake. And that seems quite obvious, but people's memories are short. But that's because of experiences that we've lived. In the last crypto winter, we learned some really tough lessons. And so we've adopted that approach, and it's really part of our core DNA.
That's a really interesting point about you've been around, your company's been around for almost half a dozen years now, and you yourself been building lots and lots of businesses, some small, some bigger now with Zerohash. I was just literally a couple of hours ago sitting with someone who worked for, I won't mention the name of the company, but a crypto-related company in this part of the world. They were talking about how much they increased their headcount in the bull market. And of course, in the last 12 months, it's gone completely to reverse because our friends at that, very successful, very well-known crypto company went, it was to the moon, right? Headcount went up and went up and up and up. And a lot of the people running it had no experience of the previous downturn. I think Gaurav and I might have the other problem, at least me. I've gone through so many downturns that
I've had enough. I've had my fair share on it. Thank you very much.
Exactly. So, but it's sometimes you don't, it helps not to have gone through those downturns because you can, you become too cautious. Whereas, sometimes you just need to just throw money and grow. But those folks who threw money and grew because funding was just abundant for crypto companies 12 months ago. Now, it's a really
it's that balance, right? It's really trying to temper, right? It's not saying that when things are good you don't spend more.
Of course, you have to invest.
It's that balance, and it's sometimes good to invest. It's that yin and yang, right?
Yeah, as you said, you're tacking. You're kind of, like basically turning the throttle completely on. You're kind of tacking. But it's been a great conversation with you. Thank you so much for joining us. Edward, what's the best way if people want to stay in touch with what you're doing, what Zerohash are doing? What's the best way to stay in touch? Is it a website? Is it social media? How do they keep in
Yeah, you can go to zerohash.com. You can follow us on Twitter, which is zerohash with an X, or you can just add me on LinkedIn, which is just Edward Woodford. Or if you want to shoot me an email, it's just quite easy. It's edward@zerohash.com.
Edward@zerohash.com. Awesome. Thanks so much for joining.
Thank you for having me.
Thanks so much, Edward.
Thank you.